You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's a very exciting time. It's a time to invest in gold equities, which haven't really reflected the performance of gold price. This has not happened with every company. So there are still a lot in the broader market. There's a lot of equities which are still screaming for attention.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me, I have my friend and mentor, Jayant Bhandari of Anarcho Capital. In this interview, you will hear Jayant's view on precious metals, portfolio diversification, a couple of his top picks, and a few words on his conference, Capitalism Morality. Jayant, it's great to have you. Let's start with precious metals. The gold and silver prices have started the year off very strong. We saw a little bit of volume come back into the equities, which was really nice to see, or maybe selected equities. I want your opinion on the gold market. Does everything look good in your view?
Thanks for having me, Brian. We have been expecting gold price to go up and match up with the inflation that's been happening around the world in terms of fiat currency valuation. So I'm so glad that gold has started to catch up with that. I think there's still a long way for gold to go to really make up for all the lagging it has suffered over the last few years because of higher nominal interest rate. Higher nominal interest rate really means that people are forced to buy fiat currency when they should actually be getting rid of fiat currency. This is a very convoluted response of the market when nominal interest rate goes up. So I'm glad that gold is finally catching up. This still has to reflect in the prices of equities. Now, I don't like to connect the price of gold, price of any commodity with the mining companies. But when the commodity price goes up substantially without the underpinning costs going up substantially, means that my profits are going to get widened. And this is what you already see with the mining companies. Their profitabilities are going up. And I think this will continue because costs haven't really gone up as much as gold price has over the last couple of months. So it's a very exciting time. It's a time to invest in gold equities, which haven't really reflected the performance of gold price. Now, as you rightly said, some of the gold equities have done very well. Thanks to you, I invested in Montage Gold. That has done extremely well over the last couple of months. And my clients have benefited from that. But this has not happened with every company. So there are still a lot in the broader market. There's a lot of equities which are still screaming for attention.
Do you think the kind of divergence between the metal price and the equities, do you think that's people's fear of risk or maybe of a coming, interest rate hike by the Fed? And like they've been talking about possibly lowering rates or at least keeping them the same, but is it that fear of something else turning the other way that keeps people out of it?
I don't think so. I think the sector has been a very bad performing sector. The mining companies haven't really given returns to their investors that investors were given hopes of. And that has meant that a lot of investors have left the sector and people are very cautious. I'm very cautious. It's very easy, Brian, to just go to Google Finance and compare the performance of GLD with GLDX and XJ. And you see that, gold price has mostly outperformed the gold equities, which to me shows that gold mining companies haven't really done even as well as gold has done, which is really deplorable from an investment perspective. And that has pushed away a lot of investors. But then what happens eventually is that people stay away for too long, which means that prices in equities have likely suffered more than they should have, particularly with the junior mining sector, which is what you and I often look at.
Right. It's interesting. There's a huge divergence between, if you're even looking at the mining sector as a whole, and you compare it to NVIDIA, Microsoft, probably Amazon. I'm not even sure what their market cap is, but I saw a graphic on social media where it showed that the mining sector in its entirety, it doesn't have over $1 trillion market cap. Yet these software companies, these tech companies, have multi-trillion-dollar market caps. Do you see an issue with that, or what does that say about our society in terms of how we value things?
It does tell you something very negative about the society, but that's not just because of the IT sector. It's also because of the mining sector. There's a lot of greed and lust that comes into existence when people do investments. Right now, there's a huge amount of euphoria to do with investing in these big NVIDIA kind of companies. And I don't even know who are these people who are investing. How do you do a valuation of a company which is now trading, goes up and down by a few $100 billion on a weekly or daily basis? There's no way you can do a valuation of it. So who are the buyers and who are the sellers? And this really makes you, sort of cynical about the people who are investing. I tell you something. When these meme stocks came into existence a couple of years back, and this movie theater company AMC. So it went up for no good reason. I did my financial valuation on it. And I short sold that stock. And Brian, I tell you not, I kept on sitting on it for a couple of months. I lost more than 5-figure worth of my money short selling that stock and paying the borrow fee. And then I had to eventually book a huge amount of loss and get out of it because I just could not maintain that position anymore. And it did fall eventually. The problem is that the market can stay irrational for a lot longer than I can stay solvent. And there is a lot of irrationality in the market. My opportunity there is to invest when market is irrational in a way that I can get into a position which can eventually benefit from rationality coming back to the market. Now, of course, that does not work when I'm short selling because I'm paying borrow fee at the same time. So I'm usually not a short seller, but once in a while I try to bet on short selling and it's not easy.
Right. Well, so let's talk about value propositions. Usually the best opportunities, like across the resource sector, come with or metals that are depressed in price. Whatever PGEs is maybe a good example right now, where these companies that I've been looking at are hugely depressed in terms of their market caps compared to what they have. But, like you were saying, there is a huge difference between being bullish on the metal and being bullish on a junior. A junior can lose you money in so many ways. So when you're looking for value and you're looking, let's say, outside of precious metals, something like PGEs, what do you need to look for in a company? Is there anything that stands out that you need to look for to say, oh, okay, the market is going to recognize the value in this company, I guess, outside of the metal price returning to where it was? Or when might the rationality come back in those situations?
It's very easy to understand gold price, Brian. Gold price is gold price. That's it. So you have a yellow metal and you have a price associated with it. It's almost like one factor behind it. But however, when you input that price into a gold mining company, that is only one factor that goes into the gold mining company. There are so many other things. You have to understand the resources, the quality of resources, the quality of management, the quality of jurisdiction, the life of the mine. You pretty much have to do a discounted cash flow analysis on these companies, and you have to so this is a multi-factor calculation. And the only way I think I can do a multi-factor calculation is by not focusing on either ounces in the ground or grade of the resources or the life of the mine or the capex or all those kind of things. My only way that I think makes my life easier is by doing a discounted cash flow analysis on these companies. Because discounted cash flow gives a sort of weighted to each factor and gives me a result. And if I have a nice upside based on it, then that's when I'm attracted towards an investment. But you still have to be very careful about political risk. which means that if I think the political risks are very high, then I will increase the discount rate, or I will just increase the tax rate applicable on my investment. I will assume that maybe I'll have to give away 5 or 10% of the value of the project to the locals or to the First Nations or whatever. You just have to be mindful of all the factors that go in and not try to fool myself by ignoring any specific factor. And then at the end of the day, you still have to be very careful about the management. You have to make sure that the management is actually at least value neutral, if not value negative for me. Because as you and I have seen, there are a lot of managements who are value negative for me. They collect salaries and they bring no value to the company. So they deplete the value of these companies as time goes by.
In Canada, I guess in the last couple of weeks, the Canadian government came out and said that they're going to increase the capital gains or the applicable capital gains on profits over $250,000 from 50 to 60 something percent, which is quite a big deal and a big change for those that are holding profits in that range. Do you think this is going to have a negative effect on the resource sector? Or maybe just in general across Canada as a jurisdiction for investment, period?
Well, when it comes to this thing, I neither care about the sector or about the mining sector or about the general investment sector. I worry about the culture of the country and the future of the country. I'm a Canadian and I want Canada to do well. You don't want to push away value creators out of the country. And by imposing heavy taxes, all that Trudeau is doing is to push away people who create humongous value for the society out of the country. These people can go to other jurisdictions and save on capital gains tax. And it's so easy to understand that if you are adding a couple of $100,000 on capital gains tax on a certain individual, he might come to a point when he starts thinking, hey, I can be based in Switzerland or Hong Kong or Dubai, save enough taxes and travel abroad, fly business class and still save more money compared to the increased expenses I have to make. And why not move offshores? And then the problem is that if the family moves away, the children become accustomed of living outside Canada. So you will have lost a whole stream of family that would have been value creators from the Canadian shores at the same time that the Canada is so keen on bringing in outsiders. So you are pushing away your own people, whereas you are bringing in all kinds of outsiders into the country. So coming back specifically to capital gains tax, I think it's a horrible idea. It was one of the simple 50% calculation on capital gains tax was easier. Now you complicate the calculation as well, because now you have to do this crazy calculation that up to $250,000, it's 50%, and then you increase the tax on all money earned over $250,000. So you complicate these things. You give jobs to accountants who are actually not adding any value to the society in terms of material wealth, because this is just paper shuffling and number shuffling. You have more income tax people chasing down people for not having calculated the numbers properly. So I think it was one of the advantages Canada had, that it only taxed you 50% on capital gains tax. But now you are pushing these people away, and it's just does not leave a good feeling in the mind, because it also tells you about what the future is like. They will increase it to 100% eventually. This is a slow progression. You give in a bit and they keep taking more and more.
Right. Over the last couple of weeks, we've seen some M&A increase in the sector. A company that we were talking about in another deal, Silvercorp, lost out on a bidding war for OreCorp with Perseus, and they quickly moved on to Adventus Mining, which was an interesting deal, and especially considering what OreCorp is compared to what Adventus is. And then we saw G Mining buy Reunion, and then probably on the biggest scale, BHP tried to buy Anglo American. What do you think of these deals, and does it tell you anything about what's going on in the sector right now?
Well, it is so exciting. I have in my 17 years of investment career never seen as many M&A deals as I see today. I have a list of about 10 companies that are going through M&A process right now, which is a very exciting process. This is pretty much, you can figuratively imagine this as a churning happening in the market. You will have mergers happening, cash coming back to the market, and cash going back as nutrients for the smaller companies. So this will invigorate the sector. So while I talked a few negative things about the sector, this is actually giving you a path for an exciting future for the sector in which money will come back to the junior mining sector. Now, the process of M&A takes about 3 to 4 months. So and a lot of these mergers will close between July and September, June and September, I would say. So this cash will slowly come to the market. This is like airing the water. The churning will happen. The sector will get cleaned up. So very, very exciting. I am also, I've followed the Silvercorp and Perseus trying to get hold of Orocorp, as if two hyenas fighting over something. It was absolutely crazy, but it also shows how much shortage there is in the market for good projects. But it also shows that so much is the shortage that companies like Silvercorp is jurisdiction ambivalent now. Silvercorp was happy to go to Tanzania, and now it's happy to go to a completely different jurisdiction, Ecuador, which is mind-boggling to me, to be honest. Now, I have done very well investing in ORR because of this hyena kind of fight happening between the two companies. And I think it's an interesting opportunity for people to pluck the low-hanging fruit, let them fight. And fund managers can't move in and out. People who are invested tens of millions of dollars can't move in and out. But as a retail investor, if I have good eye on what's happening, I can actually profit from it very nicely. And that is where I'm actually focusing on right now.
Excellent. Diversification. Do you believe in it? Is it something that you actively try to do in your portfolio? And I guess we could talk about diversification in terms of the resource sector, but then maybe I'd like you to comment on diversification in your investments, throughout your life. Like, is there a need to have investments outside of the stock market?
You should. So ideally, in a perfect world, I would invest in only one thing, because mathematically, whatever gives me the best return is all I should invest in. And that's it. I should never invest in anything more than one investment. But in the real world, where so many factors, underpinning factors of an investment keeps changing, politics can change, a volcano can erupt, or something can go terribly wrong. Something that I did not think about can go wrong, or something I did not know about can go wrong. It is extremely important for me to diversify enough that if one investment sinks, I still have enough capability left to survive. I have, a lifeboat at least. But why should I believe in a lifeboat? I should have enough of comfort that I don't have to use a lifeboat. So I would certainly not invest more than, let's say, 10% of my money net worth in any single investment, which also tells you that I'm not going to invest in a portfolio of 50 companies. I probably still have 50 companies in my portfolio, but these are the leftover companies which I can't be bothered about. They have fallen off my radar. But my core investment is still about 10 companies or so, and I'm not going to invest more than 10% of my net worth in any one investment, because the risk is that things can go wrong and then I can lose everything. When I lose 10% of my net worth, it's all right, because my 90% is still trying to make 10, 20%, 30% per year. So I'll make up for it very quickly. So that is one thing. But also, you rightly mentioned sector. Sector, in a way, is just one thing. You have to be careful that you don't overinvest in one jurisdiction or one sector. So you should have still enough survival money outside that sector. And that is why, we talk about buying some physical gold. That's a diversification for you. You should think about keeping some of your money outside your country. What if Canadian government freezes your bank accounts in Canada, which they did a couple of 2-3 years back? They don't have jurisdiction over your account in China, for example. So go and open if you visit China, for 1 Kwai, you can open a Bank of China account in Beijing. Open an account, electronically move your money if you need to, but that money is outside the control of your government, which is such a benefit in case you need legal help or you need survival money. But also you must diversify this way just to make sure you have survival money, comfort money outside the focus that you have, which might be junior mining sector.
Right. Yeah. Internationalization is such a big thing, and that actually was one of my questions I had for you. You read my mind. So, do you think bank account is that the best place to start for somebody who's probably new to the whole idea of the government somewhat being a threat to your wealth? Is a bank account the best way to start, you think, for internationalization?
So most people that I come across who get nowhere in life are people who want to take one big leap forward. When you want to take one big leap forward, you are going to stumble and fall and break your nose. The easiest job is to just do one small thing every week, one small thing every month. And a lot of people don't like that idea because these are people who also invest in investment terms. They want a 10-bagger right now. They are not patient enough. They don't want something that makes them 5 or 10%. They just want big gains right away. But let's talk about diversifying yourself. Yes, bank account is not enough, but it is still a step forward. And an account which opens for you for 20 cents isn't losing you anything. You have already actually taken a massive step with an investment of only 20 cents. Because once you are in Beijing and open a Bank of China account and you have that account operating, you now have the right to wire your money from your account in Canada to Bank of China account while sitting in comforts of Vancouver. So although it still looks like a small step, and I would say it is certainly a small step, it's a huge leap forward in terms of diversifying your wealth. And move on to things like, I'm sure there are more companies like those. I'm a big fan of Interactive Brokers. I don't use it for Canadian companies because their commissions are very high. But, once you have that account, you start investing a bit, you can soon realize you can invest in different currencies. You can invest in options, futures, treasuries, or corporate bonds, and not only in the US and Canada, but across the world. So you have 1 million instruments suddenly available in front of you. Now, how much does it cost to open an Interactive Broker account? I think probably nothing. They now don't even have a minimum charge. So you put in $100, you have an account. It's a small step forward, but a huge step forward in the long term.
Looking at the world we live in right now, there's risk all over the place. In terms of the junior resource sector, and for an investor that's sitting with a portfolio, when you look across the landscape, what's going on in the world, the risks to investing in junior mining companies as itself, what do you see as the biggest risk right now?
Well, as far as junior mining sector is concerned, the biggest risk is always the management. There are a lot of naive people, a lot of lifestyle people sitting in the junior mining sector. So you really must understand the management well. And if I understand the management well, I actually then delegate the authority of managing my investment through that management. I'm then assuming that they are sane and honorable people enough that they will invest my money in a way that it creates value. $100 that goes into the ground creates $120 in a year's time. That's what my assumption is. So the key is the management. they should understand, and it is then their job to make sure they understand the local people, they understand the politics, they understand the value of money. They want to make sure that every hole they drill in the ground is going to create overall, on average, more value for than the money that is going into the ground. So management is the key. You, of course, personally have to still worry about the jurisdictions. You have to think through so many things, the chaos that the world is in today. And this chaos is going to keep growing as time passes. This is not just about Gaza and Palestine or Ukraine and Russia, or about what's happening in the universities in the US, or about the rising crime rate in Canada, or actually a much larger genocidal things always happening in sub-Saharan Africa, which we don't even pay attention to, which will, within your and my lifetime, will become half of humanity. So, there's so much to think about. And that is why, as they say, think globally, but act locally. I want to know what is happening in the world, but I want to see how the cog of my specific investment fits in the overall scheme that I have. And I have enough cogs in play that if one thing goes wrong, I have other cogs that can take over, which means I'm diversified enough, I understand everything well enough that I am protected from any calamity. Now, people have views on other jurisdictions that they have never visited, but even if they have spent a lot of time, you don't really understand a foreign country ever. And I tell you, I have spent 20 years I've been a Canadian for 20 years, and I don't claim to understand Canadians because the fiber of my mind works differently, and I can see it. I can see the reflection of that. So you should understand that you can never understand other people. So just make sure that you make up, or you have corrective arrangements made in your investments for what is lacking in your understanding.
Okay. Could you share with us 2 investment ideas?
Right now, Brian, I am focused solely on putting any new cash in arbitrage opportunities. This is when I can make 10 to 20% of my money relatively safely. I know share prices can move up 10, 20%, but they can also move 10, 20% in my favor or against me. So I'm mostly focused on arbitrage opportunities right now. That gives me a way to invest at 10 or 20% lower than the market effectively and make quick gains. A 10% gain in a month or two can make me about 200% if I manage to roll that money over a period of time. Let me just very quickly give you 2 or 3 arbitrage opportunities. There's a company called Base Resources, an Aussie company being acquired by a Canadian company. It's trading at 24 cents Australian. There's a 20% arbitrage in it. There's Argonaut Gold is being acquired by Alamos Gold. There is, from what I see on my screen, more than 10% arbitrage upside in it. It's closing in 1.5 months time. High Gold is being acquired by Cotango. There's about 8 or 10% upside in it. Be careful. It's a very simple mathematical calculation you can do to check whether, just monitor it on your spreadsheet, and you can position yourself for 10 to 20% arbitrage upside.
Excellent. You have 2 Capitalism and Morality conferences this year, one in Calgary on May 25th and the one in Vancouver on June 1st. Tell us about the speakers and what interested attendees can expect from attending the conference.
So I have been running Capitalism and Morality Vancouver for the last 15 years, and 2 of my friends from Calgary came to me a year back saying if they wanted to start a similar seminar, why not use the same name? So I don't run the Calgary seminar, but these are good friends. We have similar values, and they are running it in Calgary. The one in Calgary is on the 25th of this month. a couple of weeks from now. And then on the 1st of June is the seminar in Vancouver. I can talk mostly about the Vancouver seminar because that's what I run, that's what I manage, that's in my control. We have people like Rick Rule is speaking, who is something that your audience is probably very familiar with. Jeff Deist, who was the president of Mises Institute, is there again, as usual. Maxime Bernier of People's Party of Canada is coming again this year. I'm a massive fan of Maxime Bernier. I really, really want him to become the Prime Minister of Canada. He is the only person at this time who can save Canada from sinking. And I tell you this based on my experience of having lived in many countries and having grown up in a third world country. I seriously advise people to pay attention. You don't want to something slightly better than Trudeau anymore. You have no choice. This is a binary situation for Canadians. Get out of this crazy wokeness or sink. And there are about 10 or 15 speakers at the seminar. Now, it's not only just a one-day seminar on the 1st of June. There's a speech on Friday evening by Albert Liu talking about the Chinese socialism from libertarian perspective. And Brian, this is something that has amazed me. I'm as hardcore a libertarian and conservative as you can think of, but I am amazed no end with what's happening in China. I am China in 3 days' time. I love that country, and I want to understand why it is doing so well. As you know, I used to live in Singapore. It's the same thing. What is it about East Asian way of thinking that makes it more sustainable than the Western civilization is? Eventually, I love the West more than I love anything else, but I want to look at the sustainability, understand it. So that's what Albert Liu is doing. There's a picnic on Sunday, a day after the seminar. And there are dinners on Friday evenings and Saturdays. So we are trying to expand it slowly. There's not, there's always about 70 to 80 people. But I don't want to promote it in a way that I get people who might not believe in what we talk about.
Well, I've attended it in the past, and I hope to in the future. And it's made a tremendous impact on my life, as of you. And I highly suggest it to anybody that's in the Vancouver area that weekend. It's well worth your time. Jayant, it's been a pleasure as always, and we will talk again soon.
Thank you very much for the opportunity, Brian.